Hey everybody, it's Chuck Barone. Wednesday, September the 6th, 2023. Another day of crazy. It just keeps on rolling. It just keeps on going. I keep hoping for a normal day, but we just don't ever get them, guys. Anyway, before I get rolling on the show, let me welcome everybody. As always, thank you guys for your support. You guys showing up every day keeps us coming back, man. We appreciate you guys. All right, so let's look at these markets today. Well, yesterday was a very happy day because the market was feeling like rates were going to be done going up. Well, today the market decided they weren't so sure about that, and the market has a little temper tantrum, and stocks sell off. So the Dow drops 198 points today. 198 points on a real nothing day. I mean, there was no real data to move these markets that I saw. The Dow dropping that 198, sitting at 34,443. The S&P falls 31 points, 4,465 on the S&P 500. NASDAQ falling 148 points, 13,872 on the NASDAQ. So stocks today taking it, not a big gigantic drop, but a solid decline, right? And the bond market's the real pressure on it, of course. Bond yields again up today. Bonds selling off. The 2-year not so bad. They're only up 2 basis points, sitting at 4.29%. The 2-year jumped 6 basis points, sitting at 5.03%, back above 5%. Bond market spooked now, feeling like higher rates are coming, even though everything I'm reading basically says that, we're going to have this soft landing. There's no chance of a Fed raising rates in this September meeting later this month. Well, we'll see about that, guys. We'll see. The dollar today up very small, up just fractionally, sitting at 104.84 on the index, a very strong number, threatening to go above 105, a very strong dollar right now. The rest of the currencies it's competing against just aren't in the game right now. So the dollar having it all to itself. Strong dollar, of course, puts pressure on gold and silver. Gold falling today $9.10, sitting at $1,916.50 for an ounce of gold. Silver falling 37 cents, $23.14 for an ounce of silver. So metal's still hanging in there, especially in the face of this dollar that won't come down to earth. It just keeps getting higher and higher. So metal's holding their own, pretty much far off their highs now. But this is a short, small correction. Certainly nothing to freak anybody out about. It's not even to 10% yet. And in the face of this strong dollar, gold and silver, certainly their price is holding up. Oil today, higher still, man. Another dollar jump in a barrel of West Texas Intermediate, now sitting $87.69. Of course, the news, we talked about it a little bit yesterday. Russia and the Saudis agreeing to continue their 1 million day per barrel cut for another 3 months. It's costing these countries big money to do this. So we'll see how long they have the patience, and we'll see if it can keep prices high. We're talking about a pretty big, recession coming in China. We're talking about a, euro teetering, right? The U.S., of course, we're never going to have a recession here. Well, we'll see. This peak driving season now for the U.S. at least is past. So we'll see if this oil prices can stay higher once we see where real demand is. Bitcoin today down very small, down just $23. 25,693 for Bitcoin, basically just running in place right now till the next wave of data comes on Bitcoin. All right, so let's talk about these markets today. The big data starts coming tomorrow, but some interesting stuff to talk about today. The bond market, guys. The bond market's got me feeling a little bit nervous. The bond market's starting to look shaky here. I'm telling you, man, there is just way too much supply coming into the pipeline right now. Huge wave of corporate bond offerings just this week. $39 billion in corporate bonds coming out. Over $120 billion in corporate bonds being offered for September. You add in the giant U.S. Treasury offerings. I mean, these are just, it's adding up to trillions of dollars. It's more than $1 trillion. Now, I don't know where all these dollars are coming from. Is this, governments just buying each other's paper back and forth? Who's buying up all this corporate paper? I mean, how much appetite do you have for corporate bonds when you can get, 6% in a CD and 5% in change in a money market account? So I don't know who's buying these bonds, but the market certainly being saturated. And guys, this isn't some fancy Wall Street thing. This isn't, a strategy to be employed by a hedge fund or a private equity group. This is simple supply and demand stuff. I mean, there obviously is always a demand for bonds. But when you got this kind of supply getting shoved down the bond market's throat, well, I don't see this. That people wonder why bond yields keep spiking higher. Well, this is why, guys. You can't keep just layering it on, and expect investors to just suck it up and lend out all these billions and billions and billions of dollars with no return. That's over. That's done now. So the bond market going to be a place to watch. I think that, is there a chance they could overstuff this bond market? I think there is. And we don't want to see the Fed getting involved with their QE or qualitative bond buying bullshit again. They're finally offloading some of that stuff now. I would like to see them continue on that and get rid of that huge balance sheet they're holding. All right, so anyway, bond market, interesting. Student loans. Everybody knows Biden, his first plan, give everybody 20 grand, got shot down, revised the plan, put it out by executive order. Now we have red team senators coming out, protesting this, going to probably put up a piece of legislation objecting this new plan. Already 4 million people have signed up for Biden's new plan. It's not, we don't even know if it's legal. The president can't really spend money like that, even though they always try. So let's see where this goes, guys. It's going to be interesting. The same objections that they had with the last one, that this student loan forgiveness scheme basically penalizes people who did the right thing, paid cash for their kids to go to school like I did, who didn't borrow money, or who borrowed money and paid it all back. Those are the people they get to pay now for other people who haven't paid back their loans or didn't pay cash to get their loan amounts forgiven. So we'll see. I think that, I can certainly understand, why these kids want some relief from some of these student loans. We're looking at colossal, gigantic balances in the hundreds of thousands of dollars, hopefully for not a worthless degree. I can certainly understand why they would want some relief. At the same time, the people who paid for their kids to go to school, who went to a school closer to home rather than one out of state that would have cost 5 times more, 10 times more. People who actually did the right thing and paid those student loans off. Well, those guys take it in the shorts, man. They get no, not even a pat on the back, not even a thank you. Now, I think if you're going to do that, if you're going to take care of student loans, how about going through the history of it and giving a rebate to the people who paid student loans off? To people who paid cash for the education for their kids. Kids who took jobs and paid cash, didn't borrow money. Those people should be in the picture somewhere. If you're going to spread money around like that, why not give everybody, if you're going to give $20,000 to a select group, why not give $5,000 to everybody and let them pay the debt as they choose? Some people would pay credit cards off, some people would pay student loans. Some people would pay personal loans or revolving debt or, even pay down a mortgage. But I think if you're going to give money out, it shouldn't be just for a select handful. It should be for everybody, right? Anyway, so we'll see where this student loan thing goes. We'll keep you guys posted. Goldman Sachs comes out today. I love Goldman. These guys are very confident, and if nothing else, now they say the odds of a U.S. recession falling to less than 15%. So Goldman now a firm believer in the myth of the soft landing. Like a unicorn, it's always heard about, but never seen. It's the Bigfoot of finance. And now they're pretty much saying that that's just the way it's going to end up. I don't know, man. I got to see this to believe it. I think that any blip, a spike in inflation numbers, because they're starting to get stubborn now. They're creeping back up, not going down. And upsets the entire apple cart. If the Fed's forced to raise rates again once or twice this year, it's going to put huge pressure on the economy. And the Fed is insisting the lessons learned from the 70s do not need to be relearned. In the 70s, they wanted this fight to be over. They wanted to lower rates. They wanted to stimulate the economy. They wanted to stop Congress and the consumers from screaming. So they declared victory and cut rates. Guess what? Didn't work out. Now they had to really raise rates to get inflation back under control. Made the same mistake again. Declared victory, cut rates. Now, and every time they did that, they had to ratchet rates even higher to tamp the inflation back down, ultimately culminating in a Fed funds rate around 19% or 20%, mortgages at 12%. So the Fed says they've learned the lessons of this. We'll see. We'll see if they, I've been telling you guys, I really still feel like if the Fed is going to raise rates again this year, there's no reason for them to wait. And I'm of the belief, myself personally, that the Fed will likely raise rates again in September. Why wait? They really want to see what the effect is in the economy? Well, we already know what the effect is. The economy seems to be moving along fine. But inflation numbers are ticking back up, which they wanted to call good news. Well, it's only ticked up a little bit. Well, great. So we'll see where all of that goes to. Goldman, we'll see if they're right or wrong. Demand for residential mortgages completely collapsing, guys. It's just we're blown out of this now. Demand down almost 30% from this point last year, and it was not stellar at this time last year, believe me. Borrowers were just getting used to the idea of rates in the 5s and up to 6%. The market tanked. As we know, last summer was not a great one for real estate, and the market has just continued completely dysfunctional. There's no supply of houses. No one wants to sell a house with a 3% mortgage to buy a new one with a 7% mortgage. Builders having their way but raising prices because they just can't help their own greed, right? Interest rates and payments outrageously high. First-time buyers, paying $2,500 to $3,000 a month payments. Now Americans are completely comfortable with $2,000 a month mortgage payments, $700 a month car payments. I don't know how you do it, man. I don't know how they're doing it. I certainly would be freaking out every month if I had to pay giant bills like that every month. I don't know what I would do. Crazy. And finally, one last little blip. The FDIC, they're the government arm, the government branch, whatever, that guarantees bank deposits. Well, as we know, they just had to seize a couple of banks. So now they are commencing with selling off $33 billion worth of commercial real estate that was held by Signature Bank, which the FDIC seized. What could possibly go wrong here? Of course, government bureaucrats know everything about commercial real estate, should have no problem selling it. All they're going to do is tank the prices because they're going to give this stuff away to their friends like they always do. And that's going to, the commercial real estate snowballs rolling down the hill, picking up speed, getting bigger and bigger. I got a bad feeling that this is only going to make everything bad in commercial real estate even worse. I mean, when's the last time the government got involved in anything and did a great job, man? I don't remember. Anyway, guys, that's it for the day. We'll be back now tomorrow and Friday. You know, I got a schedule that's just would kill a bear. I'll try my very best. I would say 50-50 I'll get a video out tomorrow. Likely not going to get a video out on Friday. My schedule is it's just stupid. So if I miss you guys on Friday, and if I miss tomorrow, I'll be back on Monday for sure. But I'll try to get a video out tomorrow. We'll have unemployment numbers and some other important data tomorrow. I'll try to get to that for you guys. In the meantime, guys, please take the advice we've been giving you. Get ready for a big weekend of NFL. NFL kicking off tomorrow, baby. Yeah. Anyway, that's it for the day. We appreciate your support as always, guys. Be back tomorrow. Until then, take care. Thanks.